Hi, everyone. Good evening. This is Vijay talking about PayPal today. We'll look at the safe harbor statement. I'm not a financial advisor. I enjoy analyzing companies and the business models. And in this episode, we will look at why we should look at PayPal. Warren Buffett says, if you don't find a way to make money while you sleep, you'll work until you die. This is the business model for PayPal, if you will, right? They built a business model, and whenever and anyone does transaction, whether B2B or B2C or P2P, PayPal still makes money even when they sleep. So it's a good business model. Why now? Essentially, the market took the company down, i.e., PayPal. So essentially, the results have been pretty decent. So we'll look into it. Like every other episode, we'll look into four things: business strategy, their moat, risk factors, and capital allocation, and anything else. So PayPal is essentially a financial services that allows one to send and receive money. So they have various products for that. One can simply add their debit card or credit card and link it to the PayPal account on one side, and then they onboard merchants on the other side. So that's kind of PayPal business model. If you look at on the right side, this is where the CEO or the PayPal management talks about building strategic relationship with American Express and Citibank. They introduced the new savings, which is interesting because the interest rates were pretty low for a long time. So we will see how that works out. They are offered buy now, pay later, which we talked about, right? A lot of firms in that space are launching in Japan and Germany. Happy Returns is an interesting acquisition that they did, and they're offering it to their merchants. And you can see they're already working with Ulta Beauty locations in terms of the return bar locations. So interesting nuggets from their annual report. Why PayPal, right? So they're a two-sided platform. If you see, on one side they have merchants. They offer merchants all aspects of digital checkout online, on mobile and in store. Also, they offer the credit solutions in terms of buy now, pay later, which is a new addition for them. In addition to similar credit facilities like what Square offers to their customers. They also have a very robust fraud and risk management suite of products for the merchants. So that's an interesting aspect. And of course, their ability to onboard consumers on one side makes merchants attracted to PayPal, right? Because folks have PayPal, it's easy for them to check out and buy, and then it helps the merchants to onboard that consumer easily via PayPal. So that's the merchant side. The consumer side is interesting. PayPal has done a lot of acquisitions. They initially were peer-to-peer originally when it was founded by Peter Thiel, which was PayPal, and Max Levchin, who's the founder for our firm now. Elon Musk had X.com, and X.com and PayPal merged together to cut down the cost of consumer acquisition then way back. So that model continues. Apart from that, they have things like Venmo, which is very popular with the millennials now, zettle, which is a point of sale in Europe, so on and so forth. So they have driven a lot of trust with this platform for the consumers. So consumers feel safe about using PayPal. If you look at the platform from both perspectives, right? Merchants integrate with PayPal to manage their business. So merchants meaning, let's say, if you are someone like Uber, you can do in-app purchases. You can use PayPal on the website. You can use PayPal on the mobile website, mobile app. So that's how merchants can quickly integrate their website with the PayPal platform. And for consumers can use the app, or they can go to a desktop on go to paypal.com and log in and do their transactions with merchants or with other people. So if you see, they have these segments. Let's look at each of the segments in depth. This is what I like to see where the company is going. So if you see peer-to-peer, they started with PayPal, they acquired Venmo. Zoom is a international money transfer, so they compete against Western Union. Western Union is more like retail outlet, but Zoom is more online. Then you have checkouts. They have a lot of solutions on the checkout, which is PayPal, Venmo, Pay Later, and Payd. This is the crux of the platform. They acquired Braintree a while ago. This helps merchants to process their transactions using PayPal's Braintree platform. Payouts are essentially Hyperwallet and PayPal. Essentially, when you have to pay out a consumer. So what PayPal does is holds the money on behalf of the consumer in the PayPal and then pays out the merchant. So it's reduced risk for both sides. And then they acquired zettle, iZettle in Europe, that does very similar to the point of sale that Square offers here in US. So it's a good acquisition. We'll see how that turns out. In terms of business and risk services, they have a bunch of acquisitions. Happy Returns is one interesting one where, when consumers return the products, they not only return the products or trade in or do exchanges, one has to take a debit or credit against that consumer account or a business account, right? So this whole end-to-end platform is offered by PayPal. Honey is coupons and rewards. Is a browser plugin. I think the acquisition was more in terms of, I think it's the most expensive acquisition they've done apart from Braintree, maybe for $4 billion. So Honey is essentially a browser plugin with maybe 17 odd million consumers on one side, and then probably another millions of merchants on that platform. So my assumption is PayPal will take these services and pitch to those merchants and vice versa. This is key. And if you see on the top, this 426 million active accounts is essentially as of December 31st, 2021. As of this quarter, they added another 2 million consumer accounts, which is fascinating. So they have close to 31 to 34 million merchants and close to 426 million consumers on that platform, which is massive. Competitors, we saw that in other presentations that I've done on payment platforms. But if you see their GPV, they hit 1.4 trillion now as of this Q1 of 2022. Massive. So they're one of the largest GPV processing payment processors. But when one compares them against Fiserv does close to 2.3 trillion, so double of that. So it's kind of interesting. So they still have room to grow if you compare them with their competition in terms of payment processing itself. In terms of moat, so the key thing, as we saw, is they have onboarded merchants and consumers, but the key differentiator is the management took a call a couple of years ago not to be payment neutral. So this allows the consumers to add any payment method. That's one. The platform is scalable, right? So which means there's incremental cost to additional transactions much lower. They're predominantly an online e-commerce player. Of course, we will see how the point of sale acquisition of iZettle goes. So those are the moat. In terms of risk factors, so there is the management is pretty strong, but in terms of the management quitting would be a risky proposition. They have done a lot of acquisitions. They've done close to $7 billion acquisition since 2020, and recently they bought some 11 million shares as per this quarterly report, value, giving a $1.5 billion value to the shareholders. So we will see that. And the other piece is competition. So local payment processors competition can be a big threat to them. And of course, the macro, which is currency and interest rate risk changes, local payment processors authorized by the regulatory government bodies of the local countries, cybersecurity, breach of their payment platform, and talent acquisition with so many fintech companies coming on the radar. In terms of capital allocation, Daniel Schumann, who's the CEO, has done a great job since since they came out of the eBay acquisition in 2015. You can clearly see the payment volumes have gone through the roof. The net revenue has grown nicely. Of course, the earnings per share has come down, and then the operating cash flow has also come down. So as well as the free cash flow. So this is something to watch out for. But as I said before, one has to watch how these acquisitions play out in terms of incremental revenue that they will add to the top line. In terms of revenue, they have a solid hockey stick growth, as we can see, close to $25 billion in revenue as of 2021. Operating margin is around 25%. Free cash flow is around 5.4 billion as of 2021. In terms of net new accounts, they're up to 428 now. They added 2 million accounts in this quarter, and this 1.25 has gone to 1.4 trillion cumulative now. So as of Q1 2022. In terms of price points, if you see, this is from their annual report. So PayPal, since they came out of eBay, that's the top graph, and they have given a return of 491% compared to their peers, which is what I would do, which is 444%. And in terms of S&P index is 224%. So if you had invested somewhere here, so you can see how much growth you would have literally doubled the amount of money that you would have doubled in the S&P index, right? So that's the expectation, and I think they have a clear thought process in terms of adding shareholder value for PayPal. On the price of the stock itself, we can see that for an year it came down from close to 300 plus all the way down now to $82. Of course, it popped up a bit after hours today. Today is April 27, 2022. The reason for that is they met the numbers, and they have given a guidance which they're expected to hit in the coming year. So that's why the stock popped up after hours today. But from a PE ratio perspective, they're still pretty reasonable. Still slightly elevated around 23, 24 range, but still reasonable. So long shot in summary, PayPal is going to be there. They are one of the largest players in US and in global market in terms of payment processing, as one can see. They have a very good network effect connecting the consumers and merchants. They are very product. I would place them both as a financial services / product tech company, and their strength is in acquiring good brands, good companies, and integrating them well with their mothership, which is PayPal. So, thank you so much for listening to this episode of analyzing a company and its stock, looking from a business model, moat, product, and risk perspective. Good luck with everything. Thank you very much.